So, talk us through these numbers. We've got a profit number here of just over $60 million. I know what the market wants to talk about. They want to talk about cash on your balance sheet. How's your cash?
Cash is good, up 10%. If you look at the 9 months on 9 months, that's really what you should look at. You know, up or right across all the numbers pointing in the right direction. We're ahead of guidance, production, costs, and cash. And we did guide a slightly softer quarter this quarter from the previous quarter, but similar to the same quarter last year. And big challenge for the last quarter of the year is our commissioning at Kibali in the DRC. We've got, we're going automated mining in Africa, one of the first of its kind, certainly in Africa and probably the world.
That fascinating developments there then. In terms of this cash pile then, Mark, what do you plan to do with it? You paid a record dividend earlier this year. Does that go higher into next?
Yes, we said that we want to keep $500 million in our construction chest, and after that, the rest we'll pay out to shareholders. And that's net of our continued investment in our future.
We had Evie Hambro here yesterday from BlackRock. It's London Metals Week. There's a resurgence in optimism and in prices. Has that seeped through to your world? You've got the base metals and then you've got precious metals. What level of optimism do you have overall about the market? I haven't got to gold prices yet, but I will.
Gold price is good. Gold industry is struggling. We haven't, mostly if you look at the top 15, 20 gold stocks, they haven't beat the gold price even, whether you measure them over 3 years, 5 years, 10 years, or 20 years. And so the question, there's a lot of movement into ETFs instead of individual equities. The royalty companies are tracking a lot of investment. So the gold price is good. The equity markets are under pressure, and everyone's talking about peak gold. In contrast to the base metals guys this week and the sort of rah-rah that we've seen. Randgold, of course, is not the only one, but is one of those that are delivering value, and we have outperformed the gold price.
Do you see peak gold? Where do you see the price?
Yeah, I believe that we've gone past peak gold. It's got to materialize now, but the industry is undercapitalized, underinvested in exploration. It's got a lot of capacity to process. It's been saved really by the higher gold price, and it hasn't invested back in its, unlike the base metals.
You talk about automation there as being one of the next progressive steps, but of course the market wants something else from you. We want an update in terms of Senegal. It's been drawing on the board, we understand, for a long time. So can you give us an update? How close are you to giving a green light to build that mine?
Middle of next year, we look to make a 20% return at a long-time gold price of $1,000 an ounce. And we won't invest in a project that hasn't got 3 million ounces of mineable gold. So we're right at that point, 2.7 million ounces and just below 20% IRR.
So when you're making that investment decision around automation of mining, which sounds really interesting, Mark, what's the sort of time horizon you're looking at? What can that deliver over what time horizon for a business like Randgold?
People think that Africa is a place where you just employ people and everyone arrives at work with a shovel and everything's manual. Well, we look for world-class businesses, and Africa is a great place to automate because the people are wireless, and we have a full intellectual distribution to draw from with regards human capital, because there's no other competition in countries like DRC and Mali and Senegal. And also, if you want to be efficient, you've got to be up there, certainly at the leading edge, perhaps not at the cutting edge in Africa.
In terms of the marketplace, I was just looking at some of the volumes on the London bullion market. They are the highest since nearly in 5 years. Silver's the highest since 1998. Do you think you're going to see a little bit more hedging come in from the gold players at these kind of prices? We have a prospect of a new governor at the head of the Federal Reserve, Mr. Powell. Is this a moment to come in and hedge production?
You know, the problem is the gold industry still struggles under debt, and you've got to be very careful. Some people, some of the more junior companies have put in hedges to survive, but that's really that's what gold miners do. Is when they feel that the gold price might go down and their future is under threat, they will hedge. I don't think so, and I believe there's a lot of people have sold royalties. Or streams, and so they've got to deliver extra gold back to pay off those forward sales. So that's a form of hedge already, which you can't measure.